Okay, I think that we are live on LinkedIn. We will not start our conversation. Since I'm in Switzerland, I have to behave like a Swiss. So I will start our conversation exactly on the hour, awaiting our audience, and very excited about this. I'd like to thank our panelists for joining, and especially those that are joining from Asia. And as I said, this is live on LinkedIn, and we expect a lot of interaction on a topic that is broad, rich, and I would say hot in the sense that it's all about using advanced technologies to digitize and democratize private markets. And of course, private markets are an umbrella term that encompass a huge variety of investments. And we'll probably also be able to touch upon the fact that private markets remain the main broad asset class where value creation continues to happen. And we will hear from our panelists about that. So this is the Swiss time, and I would like to welcome our panelists and our audience to this webinar. The topic is democratizing private markets, and we will be talking about the digitalization and democratization of private markets, or the so-called alternative asset class in the traditional sort of lingo. This process has already started, and tokenization specifically is playing an important role in this process. So we'll be talking about these developments in this webinar today and the opportunities for the investors. You will be hearing different angles from different angles. And again, we welcome your comments and questions in the chat, and we will allocate time towards the end to answer those questions. So let me start quickly by introducing our panelists, and I will start with Victor Jung, who is joining us from Singapore. Today, he is the head of distribution and liquid private markets at Partners Group. We all know Partners Group. It's one of the leading global players in private markets. Also from Singapore, we are joined by Darius Liu. I hope I pronounced the name.
You got it, Jeffy, you got it.
Perfect. Darius is the co-founder and chief strategy officer of ADDX, and ADDX is one of the top, I would say, mass regulated tokenization platforms out of Singapore. And as I said, Darius is also joining us from Singapore, but we also have, last but not least, Francois Botha, who is joining us from Copenhagen. And Francois is the founder and the CEO of Simple. Simple is an insights lab that is focused on serving private investors and family offices. And as I said, we'll be talking about this asset class and its digitalization developments. So without further ado, I'm going to jumpstart the conversation by asking both Victor and Francois to give us a sense of not only the size of this market, We're talking about private investments and direct investments, but also where are we? What's the sentiment? What's the demand for this asset class? Maybe you can start, Victor, with sharing.
Sure. Thank you, Fia. It's first thanks to ADDX and everybody for this opportunity. As you know, Partners Group, we are a private markets firm, so I think it's no one better to start talking about some stats. First, I think it's very important to map the universe, the size of all of the investors of the world. So you have sovereign wealth funds, insurances, corporate, private pension funds, etc., etc. So this entire universe is 150 trillion, and these were the figures as of 2021. So the entire world is 150 trillion worth of clients. Now, very important here. Now you have an institutional body and you have a non-institutional, what you call the retail body. You'll be a bit surprised to know that roughly 45% of this 150 trillion is considered retail, and we call it retail plus. Reason being, what you call the mom and pops, which is roughly in the US alone a $6 trillion market, we exclude that. That's like really mom and pops retail. We talk about 68 trillion, which is 45% of the entire investor universe, that is categorized as ultra high net worth, and mass affluent. So minimum 1 million plus, right? So if you look at 45% of the 150 trillion and the number of 68 trillion comes in, only 20% is the ultra high net worth. Who are these people? These are the UBS's clients, the Credit Suisse clients that have enough money to have a bank account. Now, that 80% of this 45% or the 68 trillion is what we call the underserved high net worth individual. They have the money or they just made their million, but they do not have enough to get some respect by the Credit Suisse and UBS. Hence, we call them the underserved high net worth. Now, they don't have enough to open a bank account, a private wealth account on Credit Suisse UBS. And this is where, you know, the democratic element, the tech, the digitization, the blockchain, the accessibility comes in. This 80% have less than 1%, at the most is 1% of allocation to private markets. The Credit Suisse UBS, you can already say they have a fair 5% of the total assets in the portfolio on alternative private markets. This underserved wouldn't even have 1%. Why? Because they don't have the channel to go in. They don't have access. So 1% is still an exaggeration. Now, let's put it in the perspective of private markets. Private markets as of 2020, AUM of the entire world was 7 trillion. Expected to grow by 15 trillion by 2025. Now, if you just put that 68 trillion, the retail component of the universe, under the 7 trillion, is less than 10%. Now, imagine, I just repeated this 80% of the retail who has less than 1% of allocation to private markets. You just do an optimal allocation of 5% of total target allocation to private markets. And this market is supposed to go by 15%. That means even in the worst case scenario, you will have a 1.5 trillion of new virgin AUM that will just be pouring. Now, in evidence, iCapital, we all know, Moonfair, all of the likes, these tech platforms that are giving access to these underserved retail, this tells you that the demand is just very self-explanatory. You don't need to even explain and justify the numbers, because we as a firm, we also get so many demands from these tech players, and they all claim themselves that they're unicorns. I mean, we all wish that they were all like ADDX, but we see a lot of them, more and more meetings every day. Hence, you know, this is a clear evidence of the absolute demand that we are facing. And all of the private equity players that were only paying attention to the institutional capital are, eyeing this virgin retail market, even though they're so complicated to handle. But here's where tech kicks in. I mean, that's it from our side.
Great insight. I had never realized the size of the opportunity that, is, as you said, underserved. Francois, what can you share with us from your point of view in terms of demand, sentiment, trends, and size in this market?
Effie, yeah, thanks for having me today as well. I think this discussion is super interesting, and specifically in the private markets in the context of tokenization, because we see two very hot topics coming together here, both discussed from various angles. I think the question of whether there is a demand for this asset class. So firstly, the area that we work in is, as Victor said, there's kind of the mass affluent market, and there's a huge underserved market on the one end. We work on the kind of family office segment of this. So we look at wealth of 100 million and up generally when we look at investment allocations. Part of the work that we do is understanding a lot of the data points that are out there and that's shared through, amongst others, the private banks who do surveys with their clients and some of the other data providers out there. So if we look at asset allocations in the alt segment within the family office and private wealth end of the spectrum, we know that there's around 40 to 45% of a total portfolio on average, according to guys like Goldman Sachs, UBS, have shared this as allocations towards alts. So most of those also have indicated that they're looking at increasing those allocations. So there's large percentages that are planning on increasing those allocations. And some of the other data providers out there have also shared that more than half of the family offices that they track, and this is on a set of, say, 3,000 family offices, are allocating into alternatives roughly on a similar level of their portfolio as well. So many family offices are allocating to it. There is a demand for this, and it is looking to increase as well.
Interesting. So from many different angles, the appetite is there and the growth is there. So Darius, to you, when we think of the digitization of private investments, which is a trend that has already started, but clearly it's in the very early stages and there's a lot to be done. How do you think of this journey towards, if you want, tokenization, or a journey that can be powered completely or enabled by tokenization? How do you think of it?
Thanks, Effie. I think if you sort of take a look back in history and how sort of securitization has evolved, right? I mean, 50 years ago, you had paper certs, right? You want to securitize something, you literally sort of like cancel issue 2, and then that's securitization, right? And then we started getting into the era of book entries in depositories and that sort of thing, right? And then you start having REITs and all these things, sort of products coming into the scene, and we see this digitization / tokenization as the next wave of securitization, right? Securitization 2.0 / 3.0, if you will, right? The end result is more accessibility for whatever is being securitized to, let's say, the mass affluent segment, which previously couldn't have access to these instruments. Now, the way that we see this, and if we take just a pause and think about this word tokenization, right? What exactly does that mean to you, right? If I say tokenization to person A, it may mean something completely different to what tokenization to person B. And the way that we at ADDX see tokenization is that there is a traditional asset we call the base asset that is being tokenized, right? So for example, we listed the global value CCAF from Partners Group on ADDX. It's turning out to be one of the hottest products on our platform. And there is actually an existing fund that has been around for many, many years with a fantastic track record. And we take a sleeve of that and we digitize it and issue tokens that are backed by this base asset, right? So that's what we mean by tokenization. So that process brings the global value CCAF of Partners Group in bite-sized format to all our investors so that they can allocate in the fractional units that they want to fit the size of the portfolio, whatever the size of the portfolio may be. That's tokenization. But interestingly, we do see a trend, and I believe that this will be the future of what we call digital native securities. And by that, I mean that there is not a base asset to be tokenized, right? The digital native issuances, and we have actually done a few on ADDX, would be the issuer, for example, in the future, Partners Group or other global GPs or bond issuers and the like, issue directly in token format, right? It doesn't issue in traditional format and then subsequently tokenize. It issues directly onto the ADDX platform in the form of digital tokens. And what that brings us is a fantastic opportunity to decrease the number of intermediaries and improve the operational efficiency of all of these instruments by a tremendous amount. No longer do you have to have the traditional wrappers, or you don't have to have things like transfer agents or custodians or everything, because ADDX and our digital securities and our blockchain infrastructure takes all of that for you. So instantaneously you get efficiencies of productivity, efficiencies of cost savings, and all this is passed on to the end client. So we believe that is the future: traditional, tokenized, digital native.
Wow, you brought up a lot of interesting points, and I want to take one of them first. Fractionalization that you mentioned, which exists outside of the tokenization world, in investing and fractionalizing even public equity shares and so on. But that is a part that tokenization brings to another level. And when we say that, I think I want to ask Victor about the specific fund that you decided to launch on ADDX, which I understand is one of the most diversified funds that you have. There's 500 companies in there. There's a variety of, there's VCs, there's special situation companies, there's the holdings, there's buyouts and so on. And it's a fund that's been around since 2007. Tell us a little bit about why you chose that to start with, and what is the vision going forward?
So I think, thank you. There are a lot of anecdotes in this fund. I mean, there are sometimes in where a product wasn't meant to have the objective that we have today. For example, I mean, an example is Listerine. Listerine wasn't mouthwashing at the beginning. It was, I understand that was a completely different pharmaceutical use. It was a structural initiative that we had to accommodate clients, right? Partners Group, we are more known to be, our DNA is more on enabling solutions. We started out being a investment platform for LGT on the private market side. So it's our DNA is more on structures rather than investment percent. We've developed since, and this is one of the clear examples. We have today approximately 35% of our entire AUM in evergreens / you could call it retail. So this is the more liquid. So the product that we have worked together with Darius, which was the first tokenized offering globally for a global institutional private equity fund. As you said, it's been from 2007. And the special thing about this is that, yes, it's diversified, it's global, but it's also three very special elements that a typical private equity fund doesn't have. And let me, just for the audience, let me make it a bit more tangible in the context of that underserved retail. Even the ultra high net worth, it became a hype today. 5-6 years ago, they were non-existent. Even Credit Suisse, UBS, if we all rewind 6, 7, 8 years ago, it was very absent, the private markets asset class. So what happened? And now let me give you an example of without naming specific people, I would just say a family office, a patriarch in Asia, Hong Kong, or Singapore, in where they're making a lot of money. They're selling their assets, either a casino, a real estate asset, his company, to the likes of Blackstone, KKR, Carlyle Partners Group. So now they see in the newspapers, hey, KKR, they made 5x on an asset that he sold, right? His total portfolio is not making 5x. So he's like, hey, you know what? Why is this guy making so much money on my stuff? Hey, I would like to put my money into this fund. So they say, hey, look, every KKR and the likes, they always have a sales guy. So they say, come over. And of course, we all have to go because everybody's money. So we go and we entertain, and we listen for 2 hours. And then the patriarch says, hey, I'm going to put money in you. I'm convinced I'm going to pick big bucks. Let's talk about size. And we're like, okay, let's say Mr. Wang, very good. Minimum commitment size is 10 million US dollars. That's the first shock. They were never thinking about 10 million. 10 million, maybe that entire budget for 2 years for private equity, for 10 private equity funds, just like stocks, right? So that's the first shock. They were thinking 2 million or 1 million, which by default, we are not able to accept 1 million because the minimum by paper, by contract, is 10 million minimum commitment size. That's number one criteria. Number two is 10 years of lockup.
Wow.
And many of them, they say, hey, look, wait, stock and bonds is all in, all out, right? Fully paid in. It's the trading mentality. So they're used to trading. So they're like, wait, you are caught. I need to stay married to you for 10 years. When I have trouble staying married with the same wife for 10 years, I don't even know you. And I can't take my money out 10 years. So shock number two, no liquidity. And shock number three is capital call. How do you explain capital call? How do you explain IRR, money in, money out? For them, it's total return, it's money in and money out, right? So they're like, wait, so you're charging me on my commitment, but you're only calling an X amount. So every time you tell me to give you money, I need to give you money. And Asians, especially Asian families, they don't like to have idle cash. Asian are rich, asset rich, cash poor. So they cannot let idle money sit on the bank account. So they will default and it will be forfeited. So again, I call it the 10-10C. 10 million US dollars minimum commitment C, 10 years of lockup and capital call. So we were lucky that this product that we tokenized with via ADDX was solve all of these three problems. 10 million together with ADDX, we had already a friendly setup in where this could be fractionalized with a minimum investment amount of 10,000.
Wow.
So that already solves a lot.
10,000
right?
versus
exactly
10,
fractionalization.
10,
yeah. Then the second 10, the 10-year, there's monthly liquidity. Of course, we have gatings. We cannot give. It's private equity. Private equity is not meant to be liquid, right? But we just with mathematicians and portfolio management, we have debt buyouts. You know that thing that you call a special sit. It's for us is senior debt, private debt. So with that, you get the coupons, and this is how you get the liquidity. So 10,000 from 10 million, monthly redemptions from 10-year lockup, and capital call, no capital call, is fully paid in.
Wow.
So 6 years ago, when I came to Singapore, I've been at Partnership for 10 years. All of a sudden, Credit Suisse and UBS, they're the biggest clients. We run the biggest semi-liquid portfolio for both of them. You saw UBS, they raised money, and Credit Suisse, they raised money by three banks, the Swiss Universal, the International Wealth Management, and APAC, right? APAC for 3 years took 90% of the entire fundraise in private equity for our product. Because Asians, they found out, hey, I want to invest in private equity. There's this hype, but hey, this 10-10C, hey, this is no good to me. but now they find something that is fractionalized, accessible with liquidity and fully paid in. Hey, so this is where our journey on digitization, which further enables further fractionalization, more data transparency, shorter duration in terms of time. It's at the fingertips. This is what has led us to have a 35% of our entire AUM, and this is the biggest of all. I think, you know, even Blackstone. I mean, Blackstone is the denominator effect. They're much bigger than us in AUM, but even for them, they're targeting at a 15%, and they claim they expect that at some point retail could be 50%. Even at 15% today, less than 15, they already get, you know, 3, 4, 5 billion just from retail. So it's an undeniable huge wave of that ultra high net worth that is already now from 5% to the 20 plus. Pension funds are 28% allocation, for example, but the other 80%, the high net worth and mass affluent, that's less than one. And why? It's accessibility, it's the education. So this trend will be democratized on the lower segment of that high net worth. And then I also believe that there will be another further democratization to the mom and pops, in where my great grandma could have invested to a Partners Group or Blackstone fund with $100 even. That day, I think, would come. Yeah,
that's the next wave, and I guess that requires a regulatory
correct. That's yes.
You know, approval. While, by the way, I was reading yesterday that the SEC is considering of raising the limit of what they defined as an accredited investor, which is completely, you know, going backwards in terms of...
You're absolutely right. They adjusted the inflation rate that they hadn't reflected since, I think it was the 90s. So they just dump it. So
so now they say 10 million.
It's double.
You're 10 million, Victor. Now they're saying
yes.
accredited investors is 1 million in any case. So from what I'm hearing from you, Victor, it's there is no doubt in your mind that this process and journey of tokenization will continue with, because it's opening up and serving this huge opportunity. Are there sectors, specific sectors, that lend to themselves better? Meaning, you know, when I think of the private markets, we can think of, you know, private unicorns, so to speak. We can think of hedge funds, VCs, real estate, fixed income, so many. Where is there more interest or more friction and more bottlenecks? Is there such a thing? And also you, Francois, if there's something from your universe and clientele that is of more interest to tokenize, so to speak.
Should I go first?
Sure.
Okay. Yeah. So just for the benefit of the audience, I mean, private market is private equity, which you are betting on the cash flow that it's not contracted, right? So that has the highest required returns. Number one. Number two is real estate. So you have landlord-tenant play, so it's a bit more secure. It's the credit rating. You have infrastructure, which is similar to real estate, but it's a government, you know, contract, right? So, and then you have debt. So you have 4 different spectrums, and that's why P is highest and debt is lowest. It's a coupon play. Now, in here you see a convergence of trend, like data centers, subsea cable. Is this real estate? Is this private equity? You know, so there are these sexy digital assets type of themes that are on the public side, you may not be able to access, right? So there's demand for such sexy trend, but for us, we see a lot of demand for companies that are not yet famous, but they're in an industry that is very fragmented and is anchored on a specific theme. For example, the consumer industry and all of this LGBTQ and expensive cost of life of marriage. So you only have a single child, or you don't even have kids, right? So what happens here? The humanization of pets. So pets become your friends, your life. They're not just an animal. And in the US alone, you have 30% of the US population that equates to pets. Every household spends $400 to $500 in vet care services for their pets. So they are humans for them. So you see a trend where veterinarians, they are equally as powerful as doctors, because pets become part of your family, and we're all lonely, right? So now you look into the hospitals, the vet care service, and you see a lack of institutionalization. There's no corporate, so it's all mom and pops. So here you see a potential play of a corporate or a private equity player, and creating a price discipline, a franchise model, in where a Starbucks or a Big Mac on the West Coast and East Coast have the same price. Today, vet care services, East Coast, West Coast, the prices are all different. So hey, this is a great opportunity. Hey, again, you acquire mom and pops at a 6-7 times entry EV/EBITDA multiple. You aggregate, you make like a proper service, and you make a value for money, where East Coast, West Coast, you have the same price, and you digitize all of the records, just like we do when we do our health checks, right? So then this would become a McDonald's or a Starbucks franchise in the vet care service. And these are the types of very niche, very thematic, growing much faster than any other industry. And you have a subsector of that, which is the compound medical healthcare of these pets. This 30% of the 70 million plus of the US population that will die at some point. We don't let our parents die just like that. We take care of them. We give them medicine, compounded medicine. Hey, you can't swallow. Hey, here's your pill. RIP, my little dog. And that's a segment that is growing at a 15%. So these are segments that you may not be able to identify on the listed side of things, on the stock market. Yeah. It's all private. The private world is much bigger than the public world. So we do see a demand, and where people get excited in these kind of growth stories, because they're not sentiment driven. So this is, in a nutshell, a very niche, but also anti-cyclical, that goes with a macro trend. Themes that companies like us, we map, we do an off-market sourcing and institutionalize, as an example of what you're mentioning.
Francois, what would you like to share on this topic? Victor has taken us, I'm not sure if he's only with Partners Group or also on some show with wonderful stories, and getting us all excited about what is going on behind the scenes. When you decide to retire, Victor, I'm happy to coach you for the next type of career that you.
Thank you very much, Effie. I'll take that offer.
And then Darius, let's also tokenize Victor. Maybe not on ADDX, but we will figure out social tokenization.
Thank you.
Well, firstly, Victor, I'm a huge dog lover myself, so completely share your sentiments on this. And I think maybe looking at, I think what you're also saying and sharing here is that there's a big trend in investors wanting to invest towards transformation, want to invest in towards tangible companies that they can see kind of the results, something where they are closer to kind of the target company and understand what their action of placing that investment into that target company means. And that's something that we haven't had on the stock market necessarily. There's not that level of control. There's not that level of see-through. And I think for the newer type of investor, and also just commenting on your mention of a couple of years ago, alternative investments were not available to these new investors. And this talks about a change in kind of that portfolio structure. You can tell a lot about what type of family office you're working with by looking at what their allocations are. Is it a more traditional, older type family office, or is it a younger family office that has a higher allocation towards growth, towards alternative investments? So that's the kind of telltale signs that we see there. And it is, I believe, because of this idea of investing towards transformative ideas. And so the question about the fractional ownership here and the role of fractionalizing or tokenizing and what that plays here, we've looked at transferability and liquidity as kind of these 2 points. And of course, that's a big role, because what that means is traditionally in fractional ownership, if you mentioned it earlier, club deals, fractional ownership, these are not new concepts, but often there's no real secondaries market. So if I invested in something or I bought into a specific direct investment, selling that can be very difficult. So by having a tokenization structure there, that makes it a lot easier to potentially exit those investments. So also, just as Victor also mentioned, there is these like long lockup periods, and that has been kind of a deterrence in the past. So you need to kind of plan for the exit, and that planning for the exit has been an idea that's been brought to us by kind of startup mentality and the startup way of doing business. And if we translate that to the investment decisions, something like a question around how do we get out of a specific investment, that is quite important to consider. So resale markets, secondaries markets, those are really important, and especially so with fractional or club deals.
Francois, are you seeing tokenization as becoming a structuring option for your client base that is, as you said, with the old mentality of syndication and club and so on? Is that something that you see as a natural progression of this digitalization journey?
Good question, Effie, and I think it's
a very good question. Yeah.
It's anecdotally we can say yes, we've seen maybe 1 or 2 cases, but I think the bigger question here is what kind of questions come up when we talk about digital assets. And when we talk about here, as I said in the beginning of our conversation, we have these 2 conversations that are both hot topics: alternative investments and a digitization or digital asset kind of coming together. So there's still a lot of confusion in this space. There's a lot of confusion around when we throw terms like digital assets, cryptocurrency, blockchain, and suddenly investors, or whether it's kind of the family office management and sometimes the principals themselves, might be keen, but they might be super hesitant as well, because they're not really sure what that means. So especially in this industry, there is a generally kind of an awareness around risk and different types of risks that's perhaps non-financial. This could be operational. In this case, I think there's a couple of other risks that could come up, something like counterparting risk, transferability risk, transfer risk. I think that there's a couple of those questions that are very close to kind of these investment decisions and risk playing a role there. And then there's the big unknown around what happens if we tokenize a direct investment or an alt investment. What is the impact on the actual asset, for example? What if we need to get out of that? That's always the big question. So I think that, definitely a topic being discussed from various angles, but not necessarily sure where we're at with that right now.
Darius, you have to step in here and provide. I'm sure you're also getting questions, and there's a lot of education that you're doing while providing these services to clarify points. So please share with us some, at least. We don't have the time to address them all, but some of these points that Francois rightly so brought up.
Yeah, thanks, Effie. Thanks, Francois. I think, interestingly enough, I think this kind of narrative and conversations around the technology behind digitization, tokenization. I heard a lot more about this. I've been doing ADDX for just over 4 years now. Maybe in the earlier days, the first, second year, we hear a lot more of this. But lately, the conversations is all around the products, the returns, the investment risk, what is Partners Group doing, and all that, and less so on the technology behind it, right? Because I think that maturation and the acceptance of the whole idea of using technology, whatever the technology may be, right, to bring financial products to the market. I think ADDX has gotten to a point where people have accepted that we are a trusted party. I mean, with the likes of Partners Group on our platform. I mean, before these guys came on, they due diligence us to death, right? And of course, then they came on, and we're very happy about that. But I think the fact of the matter is that we are regulated. We have been in business. We have gotten global names on the platform. So I think people have grown to accept that this technology, whatever the technology may be, you may not understand it. But the fact of the matter is, you can get access to the likes of Partners Group, private funds, private debt, structured products, direct equity on our platform for fractional ownership. And people have made money out of it, right? So there is some traction, there is track record. People from all over the world are coming to our platform. So it's almost as if when I invest in a stock of Apple or Tesla, I don't go to New York Stock Exchange and, hey, New York Stock Exchange, can you explain to me your technology, right? Nobody does that because people just accept it. And I think ADDX and digital securities have gotten to a point where it is becoming mainstream and people have accepted, and the conversation is now around the product itself, right? Partners Group, what are you doing? What pet care, companies are you doing? What's the IRR? That sort of conversation. Having said that, of course, we are regulated. We are exposed to the same, things like, for example, technology risk management guidelines as the banks do, and for those of us who are in the business, you know that MAS is one of the most robust regulators around. So I think they put us through a microscope, and all our users and the regulators can rest well at night.
Darius, I think it's important here to also share what kind of licenses you have, because you are powered because of the tokenization, you hold different licenses. What are you? Are you a custodian? Are you a broker? Or what are the licenses that are required and you have, and what roles in the traditional sort of lingo or thinking are you playing?
Right. So if you think about the life cycle of an investment instrument, right, be it a bond, a stock, a fund, whatever, first it has to be created and distributed. Then whoever buys it has to store it somewhere, and then at some point you can trade it out or redeem it or exit in some form, right? So you have issuance and distribution, you have holding it, custody, and then you have the trading in the organized market, which is the market operator. So we have 3 licenses that cover these 3 aspects of an entire investment instrument lifecycle. The CMS license for dealing in securities, which allows us to distribute. The CMS license, Capital Market Services in Singapore's term, for custody. So we are a licensed custodian, and we custodize all the digital assets that are issued on ADDX. And last but not least, we run an organized market, not unlike what you see on SGX or Hong Kong Exchange, with the bid, the ask, last done, market depth, and all these kinds of things, right? So if you look on our platform, or if you download our app and log in, you'll be able to see a trading app, not unlike the broker, Tiger Brokers or Robinhood or that sort of thing, right? But for Partners Group funds, for Maple Tree private debt, the funds, and so on and so forth. So it sort of blurs that distinction in a way between the worlds of private and public, all powered by technology. So I think that's quite exciting, and we are the only platform that's integrated across all these 3 licenses that we know of that is on a commercial scale.
Yeah, this is actually pretty important, because when people think of tokenization platforms, we typically think of a platform that really provides the tech to tokenize, and that's it. And then there's a different place of, where it's going to trade. Is it an ATS or wherever? And Darius, as you said, I just realized myself that is one of the major sort of distinctions here, that you're bringing this together, like kind of a super app.
And if you think about the this, the risk angle that Francois brought up, right? In terms of where's the risk if you are worried about counterparty risk, operational risk, and everything. I would argue that the amount of risk is actually minimized if you have everything on one integrated platform, right? The moment you have to write interfaces or connect to other counterparties, counterparty risk will come in, operational risk will come in, integration, tech risk, and all these kinds of things will come in, right? But we have control over the entire tech stack, right? From start to custody to exit, and the whole trading infrastructure is on the same blockchain infrastructure. So I would argue that, and important point here is that all the trades on ADDX settle instantly, right? We call it DVP, delivery versus payment. In other words, there's no T+2, T+1, and the settlement risk and everything. Everything happens in blockchain lingo. It crosses on the same hash, right? So there's no counterparty risk involved in any of these transactions that settle instantly. And I would argue that that's actually a safer, less risky proposition to investors of all sizes.
Yes, and this is not about investing through crypto. So you're not obviously, sending whatever Ether to buy the fractionalized Partners Group fund or anything like that.
Yeah, we support major currencies, but not the cryptocurrencies, but the USD, Singapore dollars, Japanese yen, euros. I mean, we have issuances denominated in all of these currencies as well.
Another important point that Victor brought up when he was sharing with us this great story about consumer, the pet market opportunity, is that where do you find the research to start? Or facts and figures, or even, who's planting the idea in your head that this could be an investment thesis to consider. And this is also something that ADDX it's happening on the platform, where research, third-party research and collaborative research can be shared around these investment things. And I think that's also important. And maybe, Darius, you want to share a bit about that.
Yeah, I mean, education is a big part of the ADDX sort of ethos. And so if you go onto our website on the app, you'll be able to see all the webinars, educational webinars that we do, explainer videos and everything from explaining what IRR and open-ended funds is, to explaining what private equity is, or any sort of niche segment that is sort of the flavor of the month, right? So we have a massive amount of educational content that speaks to exactly what Effie said, right? To help people understand the space, because people have traditionally not applied their minds to it because they can't get access to it, right? But now they can. They would want to access it, and we provide the content for them to consume it. So that's one. For each of the products that we launch, we also run roadshows. So, for example, when we launched the Partners Group Global Value CCAF, Victor came down to our studios and we did a roadshow, right, that explained how they selected the companies, how they triaged all the origination of deals that came in, so that they can build the best possible product in the Global Value CCAF. So I think all of these things sort of like blend in on one single platform, so that when investors go in, they'll be able to consume everything that they will need to make an informed investment decision.
Okay. Great. So what does a roadshow mean in our digital world? Darius, explain to me, please.
It's exactly the same as, if you were an institutional investor and you get invited by the UBS and the CS of the world to an IPO roadshow, right? And then you have the management going up there and telling them and answering questions about the company, the prospects and everything. In the same way, but only digitally, we will sit down with the a person from, let's say, Partners Group in this case, and do exactly the same thing, right? Well, we have a virtual Zoom webinar. People post questions to us. We explain how the portfolio is constructed, how the product is managed, what are the fees and associated expected returns, track record, and all these sorts of things. Exactly the same information that's being delivered, but only virtually. And the beauty of that is it reaches worldwide. Beautiful.
Okay, I am. We have 10 more minutes, and I'm just looking at some of the questions that have come in. Allow me 1 minute to look over them and share them with you. So one of the questions is, and I'm reading here, do you see a challenge around software infrastructure for data trading and monitoring of these assets for wealth managers, asset managers, and fund managers? Who would like to answer this? I guess Darius, is this yeah.
Yeah, I think the whole sort of setup of ADDX, first of all, is highly scalable and is completely cloud-based, right? And we started off, you know, being having the benefit of being legacy-free. We are able to build our infrastructure completely, you know, from the ground up, right? Starting from almost 4 to 5 years ago. So the infrastructure is highly scalable, is completely built on cloud and on the blockchain infrastructure. So we do have what we call our B2B solutions as well that speak directly to the needs of external asset managers, fund managers, brokers, private wealth managers, and so on and so forth, that allow them to interact with their own end clients as well as products on our platform in the way that suits their workflow. So I think we do have a B2C solution that, you know, all of us here on is free to sign up for an account and try and invest directly. But we do have B2B solutions that speak to the needs of partners that we work with, right? That take the form of wealth managers, private banks, asset managers, and so on. Yes, correct.
So can I sort of say it in more sort of condensed words that you do have API capabilities?
Oh, of course, yes.
To work with other, if you want, distribution channels of the products that you are tokenizing. I hope that this answers the question, on top of the fact that I know you have capabilities to issue new structures, whether that's of interest, and I guess also access the existing distribution.
Maybe just to jump in there, Darius, are there specific kind of wealth management platforms that you guys integrate with to make it easier for wealth managers to kind of bring those assets on board on their portfolios, or you know, internationally these are portfolio management systems that might be used in specific regions? These could be guys like ADDY, Black Diamond, SS&C, these big names that are out there. Are there existing integrations, or is it something that needs to be kind of approached on a per case basis?
Yeah, I would answer the question from the other way, right? So we have built out APIs for that you know, regardless of whatever system or backend that you use, you'll be able to integrate with us to gain access to, you know, things like instructions, order placement, data feeds, and all this kind of thing in a very simple way. So I think it is not our approach to customize it to every single one, but we built a suite of APIs that allow people to integrate with us very easily. And of course, anybody who wants to you know, engage us in that conversation, I'll be very happy to connect with you on that.
I think it's also a great opportunity, Darius, to tell us a little bit more of the regulatory constraints or barriers, or where you can be operating right now.
Right. So we are a global platform. So interestingly enough, we have customers, and these are active customers with actively investing on products on ADDX from over 24 or 25 different countries, right? From almost every continent you can imagine. So that's of course one power of technology. We have issuers, products coming globally, right? So Partners Group is Swiss. We have Middle Eastern fund manager, US products, US GPs, of course the Singapore construct around the Temasek kind of stable of ecosystem. We have many issuers from there as well. And of course, the rest of Asia, Japan, China, Korea, and so on. So we are truly global from both the distribution base as well as the suite of products that we have, right? And the suite of products would include funds, bonds, equities, pre-IPO kind of companies, and structured products as well. So I think that broadening of the amount of options that anybody who comes on the platform has, I think that's really part of our DNA.
Okay, here's another question. What is the reaction of traditional brick and mortar entities to your digital private market offering? Darius, I think.
What a great question, Darius. That's a great question.
Okay, Victor, you want to step out of the room?
I think I should, but
I wouldn't consider I wouldn't categorize like bricks and mortar, right? Because I think this whole sort of phenomenon around tokenization, digital securities, and everything, we see it as complementing the existing issuance and distribution channels, right? We provide, for example, fund managers an additional route to tap a previously untappable pool of AUM, in addition to whatever channels that they are tapping through the institutional routes that they are already doing. So by working together with ADDX, for example, Partners Group, it doesn't preclude them from continuing whatever they're doing and scaling the institutional channels. So it is, to me, a very low downside, high upside kind of proposition for anyone to work with us. And similarly for the investors, right? Accredited investors from all over the world, it's a very low downside, high upside. Low downside, why? Because you end up with a tradable security in a very small bite size, right? For example, we have a private credit fund on our platform that had a minimum size of $5 million. And we brought it down to, I think, 10 or 20,000 minimum entry size. So I think that size element, that fractional ownership, and the ability to transfer and trade it out, I think it helps people manage the risk. Interestingly enough, I think people have started using, and I suspect strongly, ADDX products as risk management tools in their own portfolio, right? Because if you think about it, and I used to run sort of a portfolio construction for GIC, right? So the way that GIC, we used to think about it in a big SWF like GIC is by adding alternatives that are uncorrelated or lowly correlated to public markets, stocks and bonds, you end up with a more robust portfolio that diversifies and generates more returns in the long run. And similarly, I think people have sort of caught on to that, right? Or maybe they've always wanted to do it, but they couldn't in the size that they want. But with ADDX, they can. So you have interesting dynamic of people, putting in 20,000, 20,000, 30,000, 20,000, all the different kinds of products on ADDX's shelf. And I strongly suspect that they're using that to manage the risk of their entire portfolio.
Very interesting. Portfolio optimization and risk management, improved rather, portfolio optimization and risk management. Okay, I see another here working with Partners Group and other big guns creates new investment opportunities. Can the same be said for smaller PE and private debt providers for example, renewable energy infrastructure and other projects in developing countries?
Absolutely, yes. Obviously, the same, legal constructs, the same structures and everything can be applied to the biggest of the big, the partners groups of the world, as well as, the small guys, right? I mean, a structure is a structure, right? And no matter how big or small you are, you can apply the same kind of structure to bring it to the market. Then, of course, the conversation would then become a commercial one, right? Whether or not the issuer has a following that would be able to come onto the ADDX and take up the demand, or there's a sufficient amount of marketing that has been brought online to make sure that the issuance is a success. So I think from a technological and a legal and a regulatory standpoint, we've got it all figured out. Then the question then becomes a commercial one, and of course there are many ways around that issue. But from a platform perspective, the answer would invariably always be a yes.
Yeah, I guess what you're saying, Darius, is that technologically, a token can be created and is more liquid, but that doesn't mean that liquidity comes automatically, right? Or it's a magical way of growing your fund.
Yeah, correct. Yeah, and I think the one related point is that even the structures that we have developed and brought onto the market, I think that is an innovation in itself, right? Because there's so many different fund types out there, right? There's the Cayman Fund, there's the Luxembourg CCAF, there's the Singapore VCC, open-ended, closed-ended, you name it, we have it, right? So over the last 2 or 3 years, we've got it all figured out, and this is it may seem easy and trivial when I say it like that, but there's a lot of innovation, both legally from the regulatory perspective, on the structuring perspective, that's gone in there, which sets us quite apart from other sort of private market syndication platforms of the digital kind. You don't see, for example, open-ended CCAF type structures on any other platform, right? And that's because we have got the subscription, redemption, equalization, all of these things figured out, and it's totally non-trivial. And I just wanted to sort of put this out there. There's a lot of, thought and innovation has gone on behind there.
The devil is in the detail.
Yes.
I'd like to thank you all at this point. We have reached the hour, and again, I maintain my Swiss precision here. Especially you guys from Singapore. It's late in the evening for you. It was a great, valuable discussion. Thank you very much, Francois, Victor, and Darius, and I'm sure our audience has benefited from your insights.
Thank you for the great moderation. Thank you.
Thanks,
Thank you,
Effie.
everybody.
Thank you.
Thank you.
Yeah.
Okay.
All right.